I made a very, very bad trading mistake. Why, you may ask? Well, for the past few days, I've been talking about how bullish NVIDIA looked, how bullish Amazon, Apple, Tesla, how bullish all of these large tech stocks looked. And what did I end up doing? I ended up grabbing overnight puts. That's a terrible, terrible mistake, because when the large tech stocks, which are the movers in the market, when those stocks look like they have more room to go to the upside, going short on the overall market is not a safe bet. It's a much better opportunity to go short when these stocks are overcooked. We are not at that point. So that, unfortunately, was a really, it was a costly mistake. It is what it is, but it doesn't usually happen. But it was a bad mistake. So I just want to share that with you guys. Just make sure that when these large tech stocks show like they are bottoming out or they have room to go to the upside, going short on the SP500 and the NASDAQ is not the play. All right. So in today's video, we're going to take a look at what the next steps are for these tech stocks. The S&P, the NASDAQ, the Russell, the bonds, and the VIX. All right. So without further ado, let's get started with the video. And make sure, if you guys enjoy the content, please make sure to like, comment, subscribe, and do all that good stuff. All right. Let's get started. Let's just get right to the point, and we basically need to see how much more room there is for the large tech stocks. All right. First and foremost, let's go ahead and take a look at Amazon. Amazon, this would be a much better time to overall start being bearish, because we are now trading outside of the upper level of the Bollinger Band. Does that make sense? It's not an automatic reason to just be bearish, but it makes a lot more sense, okay? Because we're technically overbought in terms of the upper level of the standard deviation according to the Bollinger Bands, okay? Tesla, not as overbought. Tesla still looks really, really good. It's crazy. Obviously, we didn't. I don't like the fact that it didn't close above this prior high here, but Tesla still looks good. Microsoft. This is a much better logical time to, at least start being bearish. Okay, so Microsoft, Amazon, cool. Netflix looks crazy. Still showing a lot of strength. This is new territory for the stock, but we basically need to key off of how well it does intraday and how well the rest of the tech stocks are doing. Can't really gauge too much purely on Netflix. Meta as well makes a lot more sense, right? Because we're trading outside of the upper bands now. Apple, same concept. Now Apple is at this 243, 244 level that I said I wanted to be short at, and we're here now. I wouldn't be surprised in the next few months if Apple is above 250. Obviously, a few months is a very long time. How far away in terms of a percentage is this? So 250 would be, less than 3%. So, that should definitely, I would be surprised if it doesn't happen in the next few months. Google also bounced, finally. It's a piece of crap. And it's getting to the 177, 178 area where it would make more sense to be bearish. So that's that on Google. And NVIDIA, of course, NVIDIA came, and now it ripped to the upside, basically where I thought it would end up going. We're failing to basically hold really comfortably above this 618% fib at 144.80, 145-ish area. And then let's go ahead and take a look at AMD. AMD is also bouncing. So, it's the next time there's a lot of room to the upside for these tech stocks, don't go short. But it is what it is. You can't. It was just a very, 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 very dumb mistake. It is what it is. Gotta hold yourself accountable. So there's that. Let's go ahead and take a look at the ES on a daily. Obviously, this is new all-time highs. We are comfortably holding above this trend line. A until there's some sort of a solid close below 60.50, I wouldn't even bother trying to really be short aggressively, because it looks like the market wants to hit 61.50 to 61.70 area up here. Especially, so now here's the thing. Let me show you guys seasonality. All right, so as you can see, this is seasonality for the S&P 500. Generally, during the first part of the month here, we have a move to the upside. Into the middle of the month, we get a pullback. How far that pullback occurs is yet to be considered, is yet to be known, but we get a pullback into the middle of the month, and then it continues to rally into the end of the month. And then January is also bullish into the middle of January. So once again, right, I'm expecting some sort of a pullback into the middle of the month. Once we hit that middle of the month, we're going to be leaning long in Russell stocks, in economically sensitive stocks, large tech stocks that have a lot more room to go to the upside, as well as Bitcoin related stocks. So we're going to have a lot of good opportunities to long during this dip. Most likely that's going to occur in the middle of the month. Now, what does that mean for us? It definitely is not, it's not the time to aggressively short. Like I said, it's also not really the time to start going super, super long. It would have been, right? Especially in the beaten down tech stocks, we still could. But one of the safest spots to go long is going to be into a dip. So let's hope that we get a bit of a dip into the middle of December. Of course, that's not a guarantee either. It could just continue rising. And we could have just potentially missed this solid opportunity to go long NVIDIA and Amazon and AMD, that's and Microsoft especially, but it is what it is. But this is the data. Into the middle of the month, we get a pullback. Now, do we go short into the strength short term? Definitely not, because we can continue rising. If you did want to go and take a position, there's two main things that you could end up doing. Number one, wait for a pullback. Into weakness, wait for a pullback. Number two, go long with a very tight stop loss. Or number three, go short with a very long expiration date. There's three main things that you could do up here at highs, in my opinion. I'm not your financial advisor. It's not financial advice. But those are the three things that you could essentially do. Now, in terms of the VIX, the VIX is very important to monitor because it has an inverse relationship to the market. When the VIX is rising, generally the market should be falling. But interestingly enough, today we see the VIX is green and the overall market is also green. That generally does not occur. And this is usually a precursor to the market essentially being red. So the fact that the VIX is starting to show some bullish tendencies here at this 13 to 14 level of support that we've been monitoring, this does not bode well, really, for the overall market. And if we can get a close above 14.20 on the VIX, the market should be a bit in a pullback mode. So definitely, we're seeing a lot of buyers in the VIX. Generally, this occurs as a hedge and a preemptive move to the downside for the overall market. So pragmatically, that's what's occurring. But the market hasn't really been acting pragmatically, as we know, but it is what it is. So this is a chart of the 30-year bonds. So as you can see, the bonds generally are supposed to be acting in more correlated to the overall market. So if the bonds are strong, then the overall market should also be strong. And if we get a break above 120.20 on the bonds, this could be a much better time where the strength in the bonds start to permeate more in the equities. Up here, and all of this entire downward move, the stock market was rising. So the correlation was definitely not there. And last but not least, another interesting point that I want to show you guys is the HYG divided by TLT. The HYG is essentially the junk bonds that are more high yield, and The TLT is the longer term, safer bonds that don't yield as much return. So when the HYG rises, essentially this starts to fall lower. And when this HYG divided by TLT starts to fall lower, that is generally not a good sign for the overall market. So if the HYG and TLT really, really start to collapse, like very dramatically, if they start to collapse like we did over here, does not generally bode well for the overall market. And this tends to move before the overall market starts to move lower. So we're gonna have to see if the weakness in the in this starts to permeate into the overall market. But definitely pragmatically, we're starting to see the large tech stocks starting to pragmatically again. We're starting to see the large tech stocks get overcooked to the upside. Microsoft, Meta, Microsoft, Meta, the other stocks that were overextended to the upside, Apple. We're starting to see those show a lot of like fatigue, in my opinion. The VIX is starting to get a bit of a bounce. This is starting to show weakness. This is not an automatic reason to be bearish on the market, but it's way better than it was to try to essentially short yesterday. So yeah, we're gonna have to see one step at a time. Let's take it easy. Let's see what's going on with the market. With that being said, that's that really. We take a look at the Russell. The Russell is, of course, obviously also showing strength, along with the NASDAQ. All of these are just continuing to show strength. We're at highs. But once again, it's going to be the same concept as Apple, where I thought Apple would take a pullback around 144, 143. It's going to be the same concept. I think that we should see a bit of weakness on the NQ around 21,650, 21,700-ish area. Let's see if that ends up playing out also. But with that being said, there's a lot more room to go on NVIDIA, AMD, Google, and all it takes is just all it really takes is Microsoft, Apple to just consolidate a bit, and then money can flow into NVIDIA and AMD. And then as those rise, and then once they consolidate a bit, Microsoft, Amazon, AMD can continue. So we're going to have to end up seeing what ends up happening into the end of the year and the beginning of next year, all right? But seasonality-wise, I'm expecting a bit of a dip into the middle of the month for a continued move to the upside, all right? So without further, to continue talking about this, this is what I think should end up happening. But with that being said, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.